Thanks for joining me in my market report. My name is Mike, and the market report is about mortgage rates. What goes into impacting them on a daily basis, and whether they're trending upwards or downwards, and or even going sideways. Whether if you know this or not, mortgage rates are based on mortgage-backed securities, which are bonds, and they are bundled and packaged and sold on Wall Street, just like stocks would be. And that's why we have sometimes volatility where rates could change throughout the day. We can have a couple different rate changes, or they could be pretty consistent while we have different pricing and stuff. So this gives you a little bit of information as to the background of this, of what's going on with mortgage rates, what's affecting them, and what's kind of the outlook for the week ahead. This week, a little bit about it will be jobs data. We've had the first ADP, and then the second was today's initial jobless claims. Tomorrow will be the big one from the Bureau of Labor Statistics, the non-farm payrolls. So, a little bit about myself is I am a loan officer. I do work with a national lender. If you guys got questions about this video, or if you guys got questions about mortgage programs or anything of the like, need assistance with uh, wanting to refinance or wanting to buy a property and needing a pre-approval, we're here to help you out with those capacities as well. So please feel free to reach out. But to jump ahead here, we'll go start off with the report and economic data. We got really just one item here that we really look at, and that is, of course, the initial jobless claims we get every Thursday. So the previous report came out last week at 400,000, and it got revision down by 1,000 to 399,000. Forecast calling for 384,000 this week, and it came in pretty much rate expectations at 385,000. Now, last month, I've been saying this for the last couple of days because we're dealing with the Bureau of Labor Statistics. They're expecting in the high 800,000 range. I'm hearing numbers anywhere between 885 to 895, stuff like that. So, um, I think personally it's going to miss primarily because when you look at the initial jobless claims, they all went. We were in the 300 range, and then it jumped up into the 400 range. So we had a higher capacity there. Now, I have a feeling that's probably why. Now, whether that comes true, we'll find out obviously tomorrow. But looking at some of this other data here, we have Challenger layoffs. Which basically are announced layoffs. So that dropped by about 1.5 million right here. Yeah, not even actually about 1.5 million right here from the previous month. So there's 1.5 less job announcements for layoffs here. But another one here is the continued claims. We see a big drop here, down below 3 million for the first time. And you know why that happened? Is because the benefits ran out. So for a lot of places, they didn't extend the benefits, and that ran out. So we have about 300,000 people who dropped off just on that alone, pretty much. So we'll have to kind of keep these with a grain of salt. We'll have to wait and see. It could take a little time for the jobs number to come in. Maybe August may be a better month, or September might be a better month in terms of the job, because of those people who fell off and hadn't found jobs, they may be forced to find work, and then that might show into those numbers where it may not show in July's numbers. Let's take a look here at headline news. Stocks are up. They're kind of positioning themselves ahead for the jobs data for tomorrow. Pretty much all about that. They're looking at positives and negatives out there. We're looking at the COVID cases, of course, the rise in COVID cases. We're looking at Bank of England announced today they pretty much kept everything in there, but they did say that inflation could be kind of look like it could last a little longer than they pretty much expected. Even though I do feel that it is temporary, kind of like our Fed. But they had their announcement today. But for the most part, we've been kind of repeating the same thing. They're looking at the COVID numbers. They're looking at a lot of companies are doing quite well. Earnings reports coming in pretty well, but we are seeing some mixtures in there. We do got the higher inflation, which they say transitory, but that transitory is not really defined, because it could be months, it could be years, and then if it's years, it could be absorbed into it regardless, and may not really be there. So it may have zero meaning for a lot of people. So with that in mind, let's jump ahead and see how this is playing out with mortgage rates. Mortgage rates are down today. Remember yesterday we said we had some of these long queues here, and yesterday was going to be interesting. So it showed a little bit of weakness to the downside. it could kind of work out that way, but it could be positioned for tomorrow as well for the jobs data. Um, so we're down 13 base points. Lenders did price out for a little worse pricing today, so pricing is a little worse today compared to where we were yesterday, but still pretty good position here. Now, if you look at yields, we did break. We're trying to break above this level here. Hopefully, this level can maintain itself, um, and this will help keep us in that range bound where we're looking at 1.21, 1.22 range right now. So yields are looking okay, not as well as being pushed lower, but it did rise a little bit and hitting breaking above 120 right now. All right, folks. So hopefully that answers questions. But stay tuned for tomorrow. Tomorrow will be the big day for jobs data. That's going to have a lot of importance in the market. So we'll have to see how they respond to the data we are given. All right, folks. Again, if you guys got questions, please feel free to reach out. If you guys like these videos, please smash that like button. It certainly help us out. We greatly appreciate it. You guys have a great rest of your day. Thanks so much for watching. I'll see you tomorrow's video. Bye bye.